So yeah, what's up for you guys watching this on the YouTube replay? I appreciate you being here. We got a lot to go over. I'm going to quickly do a stock portfolio update, then we'll go and do some analysis on some stocks live. So here's, by the way, my Roth IRA. We are down 5.8% in our Roth IRA on the day because of data. They reported earnings. They beat expectations slightly, and the stock still fell 15%. I'm still up 4% on them, but that's still not a good day. That made our Roth IRA down 5. We also our most recent purchase was Main Street Capital. They pay a monthly dividend, and hey, I'm getting a dollar. Yeah, they pay 25 cents per share exactly. So my 4 shares is paying me a dollar, and they pay that monthly, which is cool. And it's in the Roth IRA, so it's tax free. Yeah, hey, State Street reported earnings. Yeah, what's up? What's the ticker symbol for that stock? We'll actually check that one out here. And here's all my stocks, how we're doing on the day. Only like United Rentals and Carlisle is green. And here's my Moomoo portfolio, by the way. It's like a mixed bag today. Some stocks up, some are down. Amazon's barely green on the day. Amphenol Group is green. Let me also check oh yeah, this portfolio is super green. Check this out. We're up 2% on the day in here. A lot of companies are up in this portfolio. We had Dave report earnings yesterday. We're now up 100% on them. We literally just bought this stock not even a month ago, pretty much. We bought all our shares right here in the stocks. Pretty incredible earnings from ticker symbol Dave. Also, Yelp reported earnings. They're up 10% on the day. This is one of my small cap. Yeah, we'll look at KULR as well. So here's Yelp on the day. Toast. This is like a restaurant payment processor, payment of sales or point of sale system, kind of high margin software. Anyway, Rumble is up 25%. They reported good earnings. Let's see what's down on the day. Yeti, like those Yeti cups. Ooh, and I just made a TikTok about this. If you go watch my most recent TikTok, I made Krispy Kreme is literally at an all-time low today. They're down 71% year to date. So anyway, let's go look at some stocks here. Let's look at KULR. So let's see. Yeah, if you guys got any stocks you want to look at, let me know. We're going to do a lot of analysis on them. Yeah, Andrew, what's the ticker symbol for State Street? I don't know that one. Um, Anyway, here's KULR Technology. If you look in the top right, this one looks really risky. They're only worth $380 million. So that's a very small market cap, only 380 million. But if we go to well, this is why they're only worth 380 million. The sales are 3 million, so they don't really have much sales, and they're losing net income every quarter. But luckily, look at this balance sheet. Wow, I don't know what happened in the most recent quarter, but their assets just exploded. That looks pretty good. So, the small market cap losing money, I'd be careful with that one. But yo, are you talking about Manifish? This is, or I don't know what this is. This is a Canadian stock. I don't think this is the company you're talking about. Maybe it is. Let me know if that is. What's up, John? How's it going, dude? So let's see. Oh yeah, Eggy said United Health Group. What's up, man? So check this out. I do own United Health Group, dude. We cannot catch a break. They just keep on going lower. I'm down 5% on them. Luckily, this is my smallest position in this portfolio, but let me do some analysis on them for you. This is a nice dividend growth insurance company. Check this out. They pay a 2.2% dividend now. That's actually crazy. 2.2% dividend yield on United Health. They trade at 15.9 times net income. Very, very fair valuation. And look at the OptumRx business. We're actually customers. We use OptumRx, and the business has exploded. It's up 15% year over year. So I like that they're still growing in the net income. They had a record quarter. I think they lowered their guidance a little bit though. So yeah. What up, Eric? Let's look at Google. Yeah, we'll look at yeah, here, try not to spam here. We'll get to okay, we'll look at STT after this. And here's Google right here, man. You can't go wrong just buying and holding Google. Great valuation on this one as well. 17 PE. The reason Google's fallen recently, like if we look at the candlestick here, they fell 7% because Apple is like integrating search into their AI or something like that. I don't know, but if we look at this company's fundamentals, they're at a record 90 billion of revenue, and 34 billion of that was net income. Incredible. If we go to their net margin right here, their margins grew 30%. The cash from operations as well, like it's up 25%. They buy back 15 billion of the company every quarter in stock buybacks, and they pay a dividend. Super low payout ratio, 7.5% payout ratio. So let's look at STT. Anyone heard of State Street? This is like an asset manager, and check this out right here. The stock, I don't know if they reported earnings. They didn't, but look, they are doing pretty decent. Let's go look at the fundamentals here. So they trade at 10 times net income. So that's a very fair valuation. Investment servicing, let's see. So it's up 3% year over year. Nothing Yeah, like this is probably why they traded a low PE. They haven't really grown their fundamentals, like maybe 1-2% a year, low single digits. Hey, the investment management is up 8%, so that's actually some gooder growth, but that's only 18% of the business. But if we look at the net income, yeah, they're making a lot of money, man. Like 700 million of net income a quarter. They pay a 3% dividend yield, low payout ratio. So yeah, so nice. Yo, Narkill, dude, thank you so much for the rose. I really appreciate that, dude. I don't know if I can view that stock. I'll type it in for you. PENGU. Is this it right here? Let me know. Is it Penguin Solutions? Like, I don't. That's like an OTC stock. I unfortunately don't think I can find that one. I, I can't find that one. I do apologize. If you got another stock you want me to look at, let me know though. Oh, let's see right here. Walmart too. Yeah, dude. A lot of the grocery stores are doing great. Yeah, I feel bad, Narco. Oh, it's a crypto. Yo, I unfortunately we can't look at crypto. I do apologize there. We're mainly looking at stocks here. Are they on Robinhood? Maybe I could view it on there, but I don't think I can view it, unfortunately. Yeah, here's my Robinhood portfolio, by the way. We're down 0.24% on the day. Year to date, we're down 1% year to date. Nothing too crazy. But anyway, here's Walmart, dude. Walmart's done incredible, and I kind of own one of their competitors. I own a Sprouts Farmers Market. If let me find them. Yeah, I got 7 shares of Sprouts Farmers Market. They also look at these grocery stores. I mean, they're crushing it right now. The stock's pretty close to an all-time high. So yeah, they are on Robinhood. Oh, bet. Let's check it out. So here we go on Robinhood. Yeah, thanks again for the roast there. I do appreciate you. Okay. I don't own any crypto, but I literally don't own a single crypto, by the way. So and I wish I could give you more thoughts on them. Let's see. Um, oh, here it is. Is this what you're talking about right here? Wow, look at them. Well, in the past month here, this is probably why. Hopefully, you bought the dip on them. They're up 270%. So, geez, congrats if you own them, man. I wish I gave you more thoughts on them. All we can really do is look at the stock price. Like, they're not like a stock where we can look at the financials and stuff. So, let's see here. Yeah, no problem, dude. Um, let's see. Uh, Rivian. Oh, yo, what up, Brian? Let's check out Rivian. Yeah, so this is a company. Their largest shareholder is actually Amazon. Unfortunately, this stock is like at an all-time low, or it's close to it. Actually, it's because they're still losing a lot of net income right now, but the net income losses are getting better. Like they only lost 500 million in the most recent quarter because look, they used to lose easy over a billion of net income every quarter, but I really want to see Rivian get profitable. The sales are up 3% year over year. Like, so yeah, if we go to the shareholders down here, though, I do own Amazon though. Amazon owns 14% of the company. And here's my Amazon position. I got 11 shares of Amazon. Here's where I've been dollar cost averaging into them. I think this is a good just buy and hold for the long run kind of company. So let's see. BRKB. Oh yeah, Berkshire Hathaway. Man, Warren Buffett just stepped down as the CEO of Berkshire Hathaway. But this is a really cool. It's like an all-in-one stock. You know, you get the insurance business, you get the railroads, you get the Dairy Queen, and random companies like that. So yeah, like look at Geico, just their insurance business, 28% of their revenue. Look at this, it's over 100 billion of revenue for them now. Very incredible. And insurance is such a good business, I feel like. And the railroads, dude. Berkshire Hathaway has a solid portfolio. I wonder how the new CEO will handle that. Like new purchases. Yo, Anthony Russo said ASST. Yo, let's see. It's like Alex Russo. Let's see. So I don't know what this is. This looks really risky. It's only worth 117 million, so I'd be careful with that one. Only $100 million company, but looks I there was some news here. I don't know what the news is because there's no earnings, but the stock is like rallied a bunch. So remember, the whole company's worth 100 million, and they lose a million every quarter, and the sales are only 200,000. They have well, the assets are only 3 million. So yeah, nothing's really blowing me away there, but there must have been some good news there. I don't know what that is. I apologize. Yo, Rose said KSS stock. Ooh, yo, has anyone heard of Kohl's like that mall? Unfortunately, this stock is lower than it was back in 1997. So please stay away from this one. In my opinion, they're a dividend trap. Like, look at this. They have a 29% dividend yield. I mean, that is um, not good. Yeah, look at the sales are here. The sales are down 10% year over year, and the good news is they're still. Let me see if that's real. Yeah, they're making. If you average out the 4 quarters, they are making net income every quarter, but they can't afford the dividend. So I'd be careful with that one. Yo, check out ALAB. Let's check that one out. ALAB, is that Astera Labs? Yo, what's up, Nathan? Yeah, we'll look at. Oh, Alex, we can look at Dave as well. Dave's stock is going crazy. So here's Astera Labs. They're on my watch list. I actually do like this company. Look at their product sales. If you kind of go to it, or actually, I'll show you it down here. Go to the product sales, it's literally doubled. It's up 144% year over year. So I like to look at stocks with growing fundamentals and look at this. They're making net income, and that's real. They made 30 million of net income, and they have a monster balance sheet. Like this is the kind of company I want to own. So I like the fundamentals on that one. I wanted to look at. Someone said ticker symbol Dave. So yeah, that they reported earnings 2 days ago. The earnings were great. The stock's at an all time high. So I won't really go into the, and it's tough because it's tough to buy that stock after the risk to reward doesn't look too good on there right now to buy it. Like maybe you could juice another 10-20%, but I'd be careful. Again, hey, nothing in this is financial advice, by the way. I don't sell anything. I literally have nothing. I don't sell a course book, Discord, WhatsApp, Telegram. So watch out for people impersonating me. All I have is a YouTube channel. So anyway, here's AbbVie. Yeah, if you want to subscribe to my YouTube channel, it's Nathan Robert, Linktree in bio. I'm streaming on there as well. So here's AbbVie. This is a pharmaceutical healthcare stock, and look at the yield. You get a 3.36% dividend yield. And look, they own a bunch of these prescriptions like Skyrizi. If anyone's seen like ads for this before, look at the annual sales growth. Just of this one prescription in 2019, it was 300 million. Now it's 11 billion. I mean, you can't make up this growth. It's up 57% year over year. Let's go look at another one like, I don't know, Renvoc or what. Dang, like look at the annual sales growth. So this is why a lot of people like these pharmaceutical healthcare companies. And they have a sustainable 3% yield in my opinion. Ooh, Chris said opinions on buying Nike. Yo, I got out of that stock at kind of the perfect time, and I feel bad if anyone owns this one. I sold all my Nike at 79, and now it's at 58. Unfortunately, this company can no longer afford the dividend. If we look at the net income, it fell 32% year over year. So the sales were down 9, net income was down 32. So that means their net margins collapsed. Margins fell 25%. So yeah, I'm being careful with Nike. I'm just staying away from them. But it's not just Nike, it's all the healthcare stocks. Like, look at LVMEY. This is Louis Vuitton, Dior, Hennessy, like the drink. And look at this stock right here. It's not as bad as Nike, but they haven't done good either. And this is Louis Vuitton. I actually really like this company kind of more than Nike. It's more diversified holdings. Like, look at this. They're in a lot of high margin industries like watches and jewelry, perfumes. So, yeah, and they also have a dividend, 2.4% yield. So they're a European company though. MANX Financial is a UK company. Yo, John, what's up, dude? Give me the ticker symbol. I'll check that one out. Yeah, if you guys got any stocks you want me to look at, I'm reading both the YouTube and the TikTok chat. So let's see. What app you using? Hey, it's in the link tree in bio, Teddy. It's a brokerage. First link there. So here's Grab. Ooh, this is a really interesting company because they do exactly what Uber does, but in all these other countries. Like you notice you don't see the US or Canada. So they're in all these other countries doing exactly what Uber does. And they attracted so much attention that Uber is now the largest shareholder. Uber owns 13% of this. So if you buy Uber stock, you own 14% of this company as well. They have a great balance sheet, no net debt, finally making net income, printing free cash flow every quarter. So I like that one. I wouldn't put a huge chunk of my portfolio in that one though, just because they're a little risky. So here's Costco. Yo, Costco, I wish I owned this company. They just, oh, look at this. This app is telling me there's what is this? A double bottom and the rise probability is a 95% chance. Well, there's some technical analysis, but I like looking at the fundamentals here. You can't go wrong. I love their subscription model. They're a grocery store. You buy stuff in bulk. So consumers feel like they get a good deal. You have to have a subscription to get in. And look at that. They're making like 1 to 2 billion of net income every quarter. And they even sometimes do special dividends. Yeah, you get a 0.5% yield. But yeah, Costco, it's been a great performing grocery store. Yo, Sean said, can you check out TSM? Yeah, dude, I love this company. They they're like an Nvidia, but they have a dividend actually. So check this out. If you buy a Taiwan Semi, you actually get a 1.35% dividend, which is pretty cool. And the valuation's pretty fair compared to an Nvidia. They trade at 21 times net income, and they have a huge market share. Like they make those 5 nanometer wafer chips. Like they have a 67% market share, and it's growing as well. But look at the bottom line here. They made 10 billion in the most recent quarter, 11 billion the quarter before, another 10 billion. So they make so much money. Hey, yo, appreciate you, El Chinto. I appreciate you, man. Just want to, yeah, thanks, Jonathan. I appreciate you guys. Yeah. By the way, if you just want to support me, by the way, I don't sell anything. I don't have a course, book, Discord. All I have is a YouTube channel. So if you want to help me out, just go subscribe to my YouTube channel. It's called Nathan Robert. It's in the link tree in bio. I'm also streaming on there if you missed anything. But here's UPS, United Parcel Service. They just cut their partnership with Amazon, and now they're cutting 20,000 jobs. But that's not necessarily a bad thing. Look at this. This is like a dividend play right now. You get a 6.79% dividend yield, but the payout ratio is getting a little high, a 96% payout ratio. So we want to see their net income go up because yeah, they do have a really high payout ratio, but it's consistent. They make like 1 to 2 billion of net income a quarter. But I don't know if this is a great company. I don't know if you'd outperform the market in the long run with this kind of company, but you get the nice yield if they can sustain that. But sometimes I don't really like companies that are like the payout ratio is at 80%. Like they barely retain any money to invest in the future. They got to dilute the shareholder to get new assets. Oh yeah, hey Vincent, if you want to get this app, it's in the link tree in bio. It's the first link there. It's called Moomoo. Ooh, Nick said SoFi. Yeah, dude, this is a fintech. They have their own banking charter. I love SoFi. And check this out. Here's why they deserve all the hype around them. Look at this growth. The financial services business is up 101% year over year. Like, this is what I want to look for in a company. And by the way, full transparency, I do own this one. I might be a little biased. Yeah, we got, and with these riskier stocks, you don't want to have a huge chunk of your portfolio in them. But I like to have a little fun money in SoFi, like Robinhood, Dave, Disney had some stellar earnings. I bought them right here. It was perfect timing, I guess. I bought them at 87, thinking that they're gonna do good on earnings, and they did, thankfully. But dude, Disney's been dead money for decades. Look at this. If we go out to the monthly, Disney's the same price that it was in 2015, so a decade ago. Jeez. So anyway, yo, what up, what up, Mills? He said, can we look at HNST? So yeah, let's look at the Honest Company. Oh yeah, SoFi makes net income every quarter now too. So here's the Honest Company. So this is a small company. If you look, their market cap is 533 million. So they're really not worth a lot of money. But they did just report earnings. So let's see. They beat on revenue, they beat on net income, and they made EBIT. So yeah, they made net income and they made EBITDA. So that's actually great news. So uh uh-oh. Well, that's not good. Well, hey, what's up for y'all on the YouTube chat? If you got any stocks you want to look at, let me know. My TikTok stream just got taken down from TikTok, so that's fantastic. Um, so we're only streaming on YouTube now. So I might end the stream here unless y'all spam me with some stocks to look at. Let me go back to the Honest Company. I'll give you some in-depth more analysis on this company. So they're up 10% on the day. Yeah, they probably deserve it too because they made net income. Sorry about that. This is old quarter data. So they have a really good balance sheet. I know they have no debt, and look at that. They just grew their cash. They have 75 million of cash, and a lot of that is in cash and equivalents. Let me actually see. I bet they're making a lot of interest on their cash. Here, I'll show you that right here. Here's the honest analysis on them. So they're worth 530 million, and look at that. And they made 3 million in the most recent quarter. So this is the most recent quarter. Let me see. Was that real net income? That was real net income that they made, and I'm guessing. Yeah, so according to my calculations, they made a couple million or just around a million in interest. So, yeah, look at this. This is the interest that they're making on their cash, and look how it just exploded. Literally, they just made $800,000 of interest just in the most recent quarter. That's very impressive, and that's because if we go to their cash and equivalents, it's also grown at that same pace. They now have 72 million of cash, so 72 million of cash made them 100 or 800K of interest, and the sales grew 12%. So not bad. I like the balance sheet on that company. Yeah, John, we'll look at Realty Income as well. Ticker symbol O. So yeah, this is known as like the monthly paying dividend stock. They actually, if we look at them in the very middle of the screen here, they have a 5.68% dividend yield and pay you monthly. Now, unfortunately, this stock is lower than it was in 2019. Like this was the COVID crash right here. They're lower than they were in 2019, but you get the yearly basically 6% guaranteed dividend return, which is a great sign. And I kind of own another high yielding monthly paying dividend stock. I own Main Street Capital, ticker symbol Main. They pay monthly. They're actually up from 2019. Again, this one also probably won't outperform in the long run, but I'm getting a dollar dividend from them now every month, and it's in the Roth IRA, so it's tax free, which is pretty cool. That I actually bought them yesterday for the first time, and Innodata is down 15. They had some not so great earnings. Yo, Trap King, what's up, dude? He said IAU. Yeah, that's the gold ETF. I found a cool new gold ETF. So check this out. If you look in it's like middle top kind of, you see expenses. This ETF has a 0.25% expense ratio. It literally does exactly what gold does. It just follows a commodity. I have a new ETF for you. It's the exact same thing. Oh, did I not save the ETF? No way. I think I saved it in here. No, I didn't. You know what? That's not good. Let me go check my history here on my stocks. AAAU, yeah, here it is. AAAU. This is the exact same thing, but the expense ratio is lower. It's only a 0.18% expense ratio. The stock has done the exact same thing if you compare the two. They're both at all-time highs, and it only costs $32 a share. So IAU is gold, and also AAAU. Yeah, I did add them to my watch list. It just wasn't showing or whatever. Oh well. Let's see. Oh yeah, Jeff Mack, how's it going, dude? Thanks for being here. Dude, I got Rumble. This is a super risky company. My position is worth less than $100. Let's see. Yeah. Let me go look at the fundamentals here. So here's why I for sure wouldn't put a lot of money into this company. Well, this doesn't have the most recent quarter, but this was last quarter. Last quarter they lost 230 million. And look at this balance sheet. This is the bad news. I used to love this company because they were debt free with a ton of cash. Well, now look at that. Because they just lost net income every quarter, the net income had to come from somewhere, so it declined their assets, and now they actually have more liabilities than they have assets. So let me actually go look at what their specific earnings was. Yeah, if you guys got any last minute stocks you want to look at, let me know. I'll give you a kind of full analysis on them. So let me see here. Yeah, here's the earnings. So they beat on revenue. They lost less net income than expected, and they missed on EBIT. So it's like a mixed bag there. They're up 25% so though. So hey, yeah, they lost less net income than expected. I'm wording that weird. Sorry. Thanks for the Main Street Capital. Yeah, that I'll show you that one as well. They actually Main Street Capital. I'll show you this one as well. If you look, this one has a 5.6% dividend. I think the exact same yield as Realty Income, but this one sometimes pays special dividends. If you look right here, these 2 months, they paid an extra 30 cents that month, which is huge. That's normal than their normal dividend. They did an extra 30 cents. So they paid twice in 1 month that month. And the month before, they did another 30-cent dividend. So this company is returning a lot of money to shareholders. And if we look at the fundamentals here, I mean, they're incredible. I mean, they're making net income every quarter. The net income was just a record 174 million. So that's what I really like about Main Street Capital. Again, as a monthly dividend play, and they're a BDC, by the way, a business development company. So that actually means the dividend you receive is not qualified. Like that means it's taxed higher. It's taxed at short-term capital gains and not long-term. So like whenever I receive any of these companies dividend, like McDonald's, Google, United Rentals, United Health, whenever I receive a dividend from them, they're qualified. But this one is a non-qualified dividend. You have to pay a higher tax on that dividend. That's why I like to. That's why I own my Main Street Capital, my Roth IRA. So it would be just like 12% higher tax. It wouldn't be too big of a deal. But yeah. So yeah, that was the portfolio. Yeah, no problem, John Johnson. I appreciate. Yeah, if you guys got any stocks you want me to look at, let me know here because they just took down the TikTok live stream I was streaming on. So now I'm just streaming on YouTube, which is unfortunate. But so I'm gonna probably go fix that. But yeah, if y'all want to hit the subscribe button, we're gonna stream later today. Here's our portfolio, by the way. We're down 1.5% year to date, which actually isn't too bad. We're down 1.5% year to date. If we go to the QQQs, they're still down 5%. So we've done a little bit better. And if we go to this portfolio, this is my buy and basically never sell portfolio. I try not to sell anything in here. Sometimes I do. This portfolio is up 6% year to date, and the S&P is down 3.5. So we've kind of been crushing the market year to date, which is pretty cool. I just like being completely transparent. I'll show you every stock that I own, how much I'm up and down on them. I'm still down bad on like Perion Network, but I just can't sell this company right now, even though the stock is pretty much at an all-time low right now. If you look in the top right, the whole company is worth 436 million. So remember that number. The whole company is worth 436, and just their cash on hand is 373. They have $373 million of cash and no debt at all. Zero debt. So yeah, that's why I can't sell that one, just because they're trading at cash value. They're buying back. When they buy back their own stock, it's like so good. But I honestly want them to invest in the future. Oh, what's up, Jeff? We'll look at SEZL. This company was up like 50% yesterday. Wow, up another 17%. That's incredible. Is that an all-time high? Pretty much all-time high on SEZL. Let me look at the earnings right here. Yeah, wow. So analysts were expecting 64 million. It's the orange line there. Analysts were expecting 64 million. They reported 104, beat by nearly double. And the net income or the EPS beat by like 300%. Incredible net income beat. And the EBITDA, wow. So they truly deserve to be up that huge amount. Analysts were very wrong, or they just insanely beat expectations. So yeah, SCZL, I don't know what they do, but I I should look into them. That yeah, that was really impressive. I got some risky companies like that as well. Actually, here's my Webull portfolio. Here, I'll show you this. We are down, 4.6% all time in here. From like UiPath, Zoom. We bought Zoom like 3 years ago. Oh, SEZL is a buy now, pay later, kind of like an Affirm or a Klarna. Okay. Yeah, AMD, Enphase Energy, Calmain's a cool company. Oh, I just made a YouTube short about this. If y'all saw that, Krispy Kreme is literally going bankrupt. The whole company, if you look in the top right, is worth 448 million, and they lost 30 million just in the most recent quarter here. They lost 33 million, and it says they made 37 million 2 quarters ago. That wasn't actually true. That's because they sold off an asset. Look at this. They sold 109 million of assets. That's the only reason they made net income that quarter, because they actually they lost money that quarter, I believe. So yeah. Which app do you use for investing? Hey, I like the Robinhood app, or I use all three of these. I invest. I have a brokerage with all three of them, so I have multiple YouTube videos on like where I compare all three of them. I like this one right here, Moomoo. Yeah, if you want to get Moomoo, I think it's in the link in the description of this, or in my link tree might be linked in the description. It's the first link in the link tree. If you want to use my affiliate code, it's a brokerage. So yeah. Anyway, here's some of my most recent purchases here. We bought Amphenol Group and Amazon. I'm right now it's tough to buy anything because the market is like unexpectedly rallied since 1 month ago. So if I go to year to date, we're down 1% or 1.5. Just literally April 4th, not even a month ago, we were down 14.9%. So we've seen a huge recovery. But yeah, speaking of the buy now pay later stocks, look at Affirm really quickly. I took a lot of profits on Affirm. I sold them a while back. Wait, I might have sold them higher than where they are today. Maybe not. Let me actually go check. So Affirm is at $42 right now. Maybe did I sell it right here? I don't remember where I sold it, and oh no, I sold it right here. Let's see, at 31.67. So actually, it's a lot higher than where I sold it at. Oops. Oh well. Well, here's the good news about Affirm. The revenue growth is phenomenal. The sales are up 50% year over year. Again, if we go into a recession, I mean, yeah, Monkey D. Luffy, yeah, the TikTok live got taken down. And here's the thing, the TikTok account, I have to go submit an appeal, and it takes forever to get approved, and it's just a headache, and it always gets approved. My TikTok live gets taken down, and then that's why I appreciate you coming over to the YouTube stream, Luffy. If you want to spam me with some stocks to look at, I got you. Because I don't have a super active chat to look at from TikTok, but this is Affirm, the buy now pay later stock. If we do go into recession, the loans just won't get paid back. But they did make net income in the most recent quarter. That was the good news with the firm. They made 80 million of net income. The free cash flow is ridiculous, 268 million of free cash flow. So the thing is, they have a lot of stock-based comp, so that's why they have such positive free cash flow and the net income's lower. But they still made net income. They need to keep that up. Hey, what up? It's Will. How's it going, dude? Um, Oh yeah, let's look at. Oh yeah, this is a Warren Buffett stock. You know what? Let me go to Buffett's portfolio real quick. So if we go to Buffett's portfolio, one of his top holdings is Oxy, or 3.94% of his portfolio. His huge portfolio is in Oxy, and dang, they really have taken quite a hit recently. They did have a nice little two candles on the most recent days. Let's check out the dividend here. So yeah, you get a 2% yield with this company. The payout ratio is a 36%, so they have room to raise the dividend. A 17 PE. Oh look at that, we can kind of see some operating data here. Realized price by oil, by natural gas, net volume sales per day, 1.39 thousand. Let's see, how's their chemical business doing? It's flat. Let me go to on an annual. So yeah, this is the thing with a commodity stock. They don't grow too much over time, but midstream and marketing, I don't know what happened here. But let me go look at the net income right here. Here's the good news. This company makes easy $1 billion of net income every quarter. Yeah, they had a one-time adjustment. It says they lost 120 million. So they actually have a lower PE. They're not actually trading at 17 times net income. They're trading at like 12 times net income or something. Yeah, look at that. Berkshire Hathaway owns 27% of the stocks, basically Warren Buffett. So yeah, pretty interesting. Can you take a look at MO? Yeah, dude, this is a high yielding dividend stock that I believe is actually sustainable. So yeah, if you're looking for a high yielding dividend stock, and it pays a qualified dividend, check out MO Altria Group. If you look in the very middle of the screen, they have a 6.85% dividend, and it's completely sustainable. You know what? I'll actually give you some value here. I'll show you the numbers for yourself. So, ooh, it looks like their net income fell, but that's okay. Yeah, that might have been a one-time adjustment or something. Either way, they usually make 2 to 3 billion of net income a quarter. And let's go see how much the dividend costs. So yeah, they usually make three. We'll just call it 3 billion a quarter, and the dividend. Yeah, look at that. It's only cost $1.7 billion. So yeah, they can easily afford the dividend. I think they're doing buybacks as well. Yeah, look at this. After spending billions on the dividend, they're still buying back their own stocks. So let's see. You now own 2% more. This is such a shareholder-friendly company. Wow. So they're growing their EPS then when it, wow. So yeah, they deserve probably to be at all-time highs. I mean, the valuation's still low. They trade at 12 times net income. I mean, that's really cheap. And the dividend is sustainable, qualified dividend. They just sell a commodity though. Um, tobacco and stuff like that. But they have a nice yield. That'll bring up your average portfolio yield. And I love dividend stocks, by the way. If I go over here to my main taxable account, every stock in here that I own pays a dividend, every single one of these. Even though some of these are like dividend growth companies like Google, I'm not really buying them for the dividend, but I'm buying them for the dividend in 5 years when I'll have a 3% or maybe 5% dividend yield on Google in like 5-10 years. And like United Health, this is one of my higher yielding ones. They have a 2.3% dividend yield right now. McDonald's has a 2.5% yield. McDonald's pays a qualified dividend, dude. McDonald's, this is such a steady grower. I mean, they're a real estate and royalty company, which I love. So, oh yeah, here's my Roth IRA as well. We're actually down like 5% on the day. Yeah, we're down 5.95%. That's from InnoData. They they met expectations and then the stock fell on earnings. So they were at a high PE anyway. But oh, what up? He said, what about First Solar? Let's check it out, dude. Yeah, so this is a solar stock, and here's what I really like about them. They make a lot of net income. They trade at 9.5 times net income. I mean, they just sell a commodity. But look at this. They actually make net income every single quarter, like 300 million. That's the good news about solar. And I think Trump likes solar. I don't know. That's doing a lot better than my Enphase Energy. This is another solar stock. They compete with First Solar. And look at this one. This stock is here's First Solar has held up a lot better than Enphase because look at this. Enphase, they even lost net income. That's what's so cool about First Solar. First Solar didn't lose net income in these high interest rate times, but Enphase did. Their net income went negative, but Enphase is starting to come back a little bit. They're starting to make some net income, which is a good sign. But yeah, look at the sales decline there on Enphase. It still hasn't even recovered. Still down 50% from 2023. So yeah, the Enphase deserves this huge collapse. Dude, this was a $339 stock. Yo, I used to own this one a long time ago. I sold, if you look, I sold 4 shares at 194. I sold out of my position at 194, bought back in at 60, and now it's at 50. So yeah, unfortunate for Enphase. But that's a long-term buy and hold. Like a lot of these stocks are like long-term buy and holds. I mean, dude, Zoom, when was I buying this? I was buying it in 2021. So yeah, Zoom, yeah, I've been holding the bag on them for like 4 years. UiPath as well, dude. This is one of my biggest losers, pretty much. So sad. Dude, if we go to our all time in here, by the way, don't listen to me. I'm not an expert. This isn't financial advice. I don't sell anything or nothing, but we're down 4.6% all time in here. I got a little bit of cash. I'm ready to buy the dip if something happens. Yeah, Dave, this has been insane winter. We bought this stock literally a month ago. There's the buy purchase right there. We bought 7 shares on April 3rd, so just over a month ago, and the stock has doubled since then. Pretty incredible. I don't believe it. Disney also had some good earnings. Um, and Yelp, yo, some companies reported today, Yelp and Toast. Yo, if anyone's heard of Yelp before, you like leave a review on an app. Here's what's so cool about Yelp. They are completely debt free. They make in net income every quarter. Let me show you this. So they have no debt whatsoever. $330 million of cash. If you're wondering why is the cash down 22%, it's for the best reason ever. They're buying back their stock like crazy. So if we go to the total common shares outstanding, you now own 4% more of the company than you did 1 year ago. There's 4% less shares that exist. And that's what's so incredible. And here's the total debt. You see how the debt says zero? That's because they literally have no debt. So Yelp is a cool debt-free company that I just like the risk to reward on them. And Toast as well. This is like a restaurant POS, point of sale system, like service provider, high margin business. They're up 11% on some good earnings. Thank goodness, because they've been yeah, Buffett been holding the bag on Kraft Heinz. Yeah, there was some bad news about Kraft Heinz or something. Yeah, if we go back to Warren Buffett's portfolio right here, um, let's see. So yeah, if we go to his top 10 holdings, Kraft Heinz is in this top 10. It's 3.3% of his portfolio. And yeah, look at them. Unfortunately, Kraft Heinz has been nowhere. You know, this company used to be owned by Mo Ultra Group. Y'all remember Ultra Group? We were just looking at them. The tobacco stocks, you probably already know this, but the tobacco stocks is what owned Kraft Heinz, and then they spun it off, and then the investors, the bank investors, just juiced the dividend out of Kraft Heinz where it wasn't sustainable. So anyway, this stock unfortunately has not done too good, but I love their brands. Like they own Lunchables, they own like Capri Sun, a lot of random stuff like that. But like 6% dividend yield on this company, 70% payout ratio. It is sustainable, so they can hold on to the dividend. They trade at 12 times net income. Yeah, let's see their net income right here. So this is weird. Like they're having some weird restructuring one-time adjustments because if we go to operating profit, they make they should make 1 billion of net income a quarter, but their net income somehow went negative. So they must have like, I don't know what happened there. They had some special charges or something, man. I don't know, but they the dividend should be sustainable. Yeah, I I don't really know, but anyway, I'm gonna go try and get my TikTok account unbanned. I appreciate y'all being here. If you're new, hopefully you'll subscribe. We're gonna be live later tonight, probably. Thank you for being on YouTube because TikTok just doesn't like me or something. Thanks again for being here. See y'all later. See you, Jeff Max. See you, Luffy. Hope you have a great rest of your night. See you, It's Will, and